Guys, I'm delighted to welcome back to the podcast my friend Rebecca Walser. She's a wealth strategist. She's a tax attorney, best-selling author. She has her MBA from the London School of Economics. She's also the podcast host of Crashes and Taxes. Rebecca, welcome back. Great to have you.
Thanks, Dinesh. Glad to be here.
I was really struck by the somber declaration, both by Xi of China and Putin, that change is coming after 100 years. Now, I think that refers to a lot of different things. The rebalancing of power, China's accumulation of military strength, its ability to exercise power in the South China Sea. But there's certainly an economic dimension here that they're referring to. And I think specifically it is that they're creating a new coalition, it seems, to break free of the US dollar. And I thought there's no one better. In fact, when you came on last time, you were talking about this exact thing. So tell us where we are now, what is happening, and what can we look forward to over the next several months?
Yes, Dinesh, such a huge thing, such a huge thing. So we did call it, you're right. But this has been really in process, I'd say in earnest for sure for the last 20 years. Obviously, this is a longer term trajectory. Obviously, we got the Federal Reserve with the 1913, Commission of the Federal Reserve, which is a private corporation. It's not a U.S. government entity, as many people mistake and believe that it is. It's got a private charter from 1913 from Congress. And then 1944, the Bretton Woods New Hampshire agreement, where the U.S. would be pegged to basically gold, and therefore instead of pegging all currencies to gold, other currencies would be pegged to the U.S. dollar at 35 cents an ounce for gold. So we had the gold standard. And then you fast forward to 1971, when Richard Nixon finally took us off the gold standard. And then you move to 1974, where we tried to once again tether our currency creation opportunity that we then had with full-on fiat currency tied to no hard assets for the first time. We tried to make a tie to black oil, crude oil, so black gold, if you will, so that we still had this ability to not untether completely and go crazy. And over time, that is greatly diminished. And so what you have seen is China is probably the most strategic thinking country in the history of time. They literally have mathematicians, economists, scientists, war games, war strategists. They have all of these people together, multidisciplinary strategies, multi-year, long-term, 50-year plans. And so between their Shanghai Development Corporation, their Belt and Road Project, which is an infrastructure project which crosses multiple countries, really starts to bring in, and then you look at BRICS, which is the ultimate alignment, Brazil, Russia, India, China, South Africa, which has picked up so much of the world since 2020. What we're seeing, Dinesh, is a migration of countries moving away from the West payment systems, the SWIFT systems, the NATO country alliance, the Five Eyes, Australia, New Zealand, England, America, Canada, that group that really is the power behind NATO. This is moving away. And you've got about 80% of the population of the world moving towards the BRICS nations and the BRICS foundation that they're creating. And so we are at the point now where America, unfortunately, we were a little bit too egotistical. We were a little bit too big for our britches. We believed too much in the Keynesian economic theory of modern monetary theory. And we went with that in 2008, 2009 to get us through that crisis. But then we heavily relied on our ability to create wealth and create money in 2020. And so did the rest of the world. And so basically what has happened is this global pandemic and global economic shutdown has really brought about the economic conditions that have made America the weakest economically we have ever been, is what my professional opinion is. And it is making these BRICS nations have all of the cards in their hands. We do not hold the cards in America right now. We just don't. We are the weakest. And what you're seeing now and what the analysis is telling us now is that we are on the precipice of a global sovereign debt crisis. And it is global. And Dinesh, it's so interconnected between countries because since China joined the World Trade Organization in 2001, and America really just became its consumer, it's a producer, we're the consumer, we obviously have so much lost autonomy of self-sufficiency because of that. But we are really beholden to them, economically speaking, even just pharmaceuticals. And we didn't learn that lesson in 2020. We didn't reroute supply chains and start domestically producing our medications again. We learned nothing. And now we are at the precipice of, unfortunately, this sovereign global debt crisis, which the analysis economically, Dinesh, I know I've got a lot here, so I'll cut this off now, but I will just tell you that the analysis is showing that the Federal Reserve would have to do, and I'm talking immediately now, about 4 successive rate cuts in order to prevent this crisis from imploding upon itself. And that's just not going to happen, because even Powell, with his comments last week at the FOMC meeting, was very hawkish. And the reason he's very hawkish is because if he acts anything other than hawkish, the market is going to say, what does he know that he's not sharing? And you could see that collapse the dollar. So if the Fed pivots and starts to cut, you're looking at potentially hyperinflation and the dollar being dumped. We have African leaders already telling their citizens to go ahead and dump the dollar. We have the Trilateral Commission, which is a globalist organization, as you know, saying that 2023 is the very first year of the New World Order, as a lot of these countries are moving to central bank digital currencies. And as you know, the Federal Reserve has launched, and this has been something I've been bringing up for a long time, but the Federal Reserve is now announcing that their FedNow digital dollar central bank digital currency will be live July of this year. So it almost looks like a setup to a global implosion of the current fiat debt system, moving us onto kind of unilaterally a central bank digital currency platform.
Do you think in the wake of all this, Rebecca, that it's first of all, it seems to me sound advice for people to call you. But isn't it also good advice for people to say, let's be really careful about many of us over many, many years would just habitually put money into the market. The idea is that long term, the market's going to be fine. There's going to be some ups and downs. But I think what you're saying is that there are some fundamental structural changes taking place. And you not need to have maybe a much more cautious strategy because of the political and fiscal irresponsibility that we have shown as a country to put ourselves in this dangerous situation. Is that a correct reading of what you're saying?
It's 100% correct. We, as Americans, have to go into a short-term mode here. It's not the normal assessment of a portfolio. It's not the normal, hey, what can I grow in what sector of equities, what bond sectors, not what fixed income. This is a little bit of a carve-out of normal portfolio management in which we are looking more for bridge assets that will take us from the existing system, that really will attain true value, and that will still have intrinsic value in the new system. Even if they are revalued, it's relative. So if I've got a person who's all in equities and bonds and a normal portfolio, and then I have a person who is in commodities and who's got some hard assets, this portfolio is going to, obviously, if we go through this global sovereign debt crisis and transition to a new system, the traditional portfolio is going to be decimated. It is certainly overbought, overvalued. Like I said, it's untied to any real true hard asset values that we actually organically have. So you're going to see traditional portfolios. You're going to see, unfortunately, I would call it a black swan event. And then on the other side, the bridge assets, what we're trying to do is relatively make our clients better so that assets that are still intrinsically valuable, even if they're revalued, if you look around at the rest of America that were in equities and bonds, you're going to be so much better off because your assets retain value, even if there's a new leveling of who is wealthy after this happens, because that is exactly what will happen. We will have a reorganization of wealth in society, and different groups will come out ahead of other groups. And so it is a very challenging time, Dinesh, for sure.
Wow. Folks, you got to be prepared. And Rebecca Walser, thank you very much for coming and sharing this wisdom with us. I appreciate it.
Thank you so much.